Now you see me. So had some problems with my camera, but yeah, I went long in here. I was waiting basically that we can displace above the breaker right here. We formed a SMT as well. We are also approaching 1030, like that we eventually yeah, sweep the high right here and yeah, trade a bit higher. So waiting for a retracement basically to form in here. I do expect that the market maker buy model right here would reach even for external buy sell liquidity. Damn. Um, Crazy candle right here. Maybe we will even get stopped. We will see. Really bearish candle, insane. Wow. Just displaced through like 4 up close candle. Doesn't really looks good. 5-minute candle is insane. Yeah, we got definitely stop rated and we are stopped right here. Okay, quick trade, definitely on the wrong side, I would say. So why I'm looking here for longs is actually due to the yeah, okay. So our daily looks really awful actually. So huge high time frame gap. Actually I was expecting bullish conditions. We already traded higher. But yeah, we scrapped already the daily buy sell liquidity right here. Still I was expecting that we still reach to close basically candles within the gap right here. So that's still a huge inefficiency. On the 1 hour chart, we have the daily buy sell liquidity right here. And we also do have the yeah, huge imbalance right here. And I was looking at the quadrants actually, and we were actually reacting of consequent encroachment. We also had the high time frame gap of today's trading day right here. And yeah, so we already were definitely trading high within London. Then we traded high with New York Open, kills on scrapped London buy sell liquidity, formed SMT and sold off heavily with the opening. I think that's definitely a bit difficult, especially because on regular trading hours, right here you can see that we have actually a new opening range gap of 200 handles, and therefore we don't want to see that we try to fully close in the gap. That's definitely a bearish signature. Would have liked that we only maybe come back to consequent encroachment and then trade higher from there. We still have like the liquidity right here, and also the quadrants from Friday's new opening range gap right here, which we could have traded into, but yeah, looking more bearish actually. So definitely offside with this one, or we will see. Now we're trading once again higher, or really difficult. Yeah, I will try one more time. I think it was definitely a stop rate in that case, and like manipulation around here. So especially because ES is looking more bullish, so I really like actually that we are still holding strong bullish even with the huge down close candle. And actually kind of my stop placement was actually wrong. So once again, I did not had it below the invalidation point, which is the SMT right here. So that's, yeah, in that case, I did not expect it such a huge aggressive displacement through the breaker right here, but getting stopped, as you see where my where the arrow is basically pointing at, there I got stopped. And in that case, to have like yeah, only 11 points more of risk is definitely worth it, because that's your invalidation point. So definitely it is a huge stop right from here. Yeah, 55 points, but then I should have only traded like one contract. In that case, we need yeah, still to have our stop basically below the swing low. That was in that case the wrong approach. Now trying again. Basically making now the same mistake again, but because we already manipulated lower, I expect the low now to be in. So therefore, I think it's basically I'm able to have a tighter stop, especially because we now approach 1030 and I want to see speed to the upside. So would like to see that we basically leave the gap right here unfilled and yeah, form basically now a low in here, and we will see some aggressive movements to the upside. It would be perfect in that case. Yeah. Yeah, and we will see how this plays out. Basically outlined how I want to trade this trade, looking only for a retracement, probably taking partials around here, aiming for, I don't know, the high time frame gap right here, 830, something like that. I outlined basically my high time frame PD arrays. We are in the right time, approaching 1030. We have SMT down here in play. My stop should have been below the invalidation point. We basically had short-term run-on stops twice before SMT in play, displaced through the breaker, got stopped once due to the wrong stop. I would like to see now with 1030 basically speed to the upside, looking for a lower time frame retracement, not a higher time frame retracement. I do not expect that we actually will reach extra liquidity, but I would like to see that we basically trade back to, I don't know, 25,550. Just seems a really good level in that case, above consequent encroachment, something around here. So we will see how this plays out. We'll now basically go mute and yeah, see you soon. So took my first partial right here, really content with that actually. Why? Because we are now basically above consequent encroachment of our yeah, price range. Basically, we expect for a market maker buy model to reach the upper quadrant, but still, because we are regarding this basically as a high resistance move, more as a lower time frame retracement, we have to like take also like the low hanging fruits. I really like actually the close above the higher time frame gap on the 5-minute chart right here. So therefore I was content, or not content, I was expecting that we will reach for the 0.5 level right here. So that's the Fibonacci extensions basically from the move right here, followed by the manipulation. We could also look to it like, I like this even more. So that's basically our move to the upside, followed by our retracement, then our expansion to the upside. So we have to see how much we can expand higher. Why I also don't expect that we will reach for the equal highs right here. Basically because we have SMT right here, so therefore we actually do have a swing high right here, which should be protected, and also because the high right here swept we also have SMT right here. This basically the whole price region right here should be more regarded as a more high resistance price range. So to aim for 830, something like that is reasonable, I think, and we have to see. So that's what I'm looking for. Really like the delivery actually higher right now. Also went break even now because I booked a partial. Don't want to take any losses from now on. And yeah, so really like that. Maybe even looking for something like that. The opening price at 830. We have to see. Maybe I will also get start or have a bit more aggressive stop movement. Depends on how we trade on ES, because ES is definitely ahead of NQ. So definitely far ahead, approaching the upper quadrant of the price range, but because ES is more slow than NQ, I don't really know actually. So yeah, we have just to see. Yeah, with approaching the long close macro, we have definitely to be more careful, because then I expect basically a continuation to the downside, because the overall market conditions are for me not really bullish. So I will definitely expect a deeper retracement, even if we don't reach within the long close macro external sales liquidity. We will definitely get a retracement, a deep retracement, or something like that, or that's more likely to happen. Doesn't mean that it has to happen, but it's definitely more likely to happen. So yeah, that's what I'm looking for, and we will see how this plays out. All right, so yeah, that's the deeper retracement I was talking about with approaching the long close macro. Right here, 1045, slowly, basically having lower volatility to the upside, and then with 1050 we definitely displace lower. So yeah, that's what you have to be aware of. Also, what I really think is quite interesting is the fact that we have a immediate rebalance on the hourly chart right here. So that could have been a really clean target actually. So we could have hit it by it perfectly to the tick. So that's our immediate rebalance on the hourly chart. So yeah, really interesting. Because we only trade a retracement, therefore yeah, we have to expect once we formed a top in here, we will get some really aggressive displacement to the downside. And now we actually are able to look for shorts, I think, because we can still expect that we trade lower. It's more if we can find a valid entry in here. Looking at the order block, I think right here. So maybe that's a quite clean break in that case. Yeah, looking good actually quite now. And we are able to even look for yeah, really external sales liquidity because of regular trading hours. I will show you in a second, but first I want to see how we trade in here. I really like the displacement. I have to admit. Really clean delivery. I'd like to see that we use the order block right here, the up close candle, as resistance higher. That we eventually even don't trade above the wick right here, which reacted perfectly to consequent encroachment. Would be perfect. I would enter here with 2 contracts, but because today is a bit more difficult day and I'm now actually up on the day, basically break even. I don't want to risk too much. But eventually you can even aim for the London lows down here. This should be our draw. Why? I will show you now. Because on regular trading hours, I once again have to outline that I'm really put much weight basically on regular trading hours. Why? Because to me it's a really strong draw for price, or we have a really clean direction. It's like the high time frame, but right here you can see we have a new open range gap of 211 handles, as I explained before. Therefore, we actually want to see that we only trade back to the upper quadrant, or at least, let's say the upper quadrant, and sometimes the consequent encroachment level, and from there on we should follow the trend. We don't want to see that we just displace through them, that we do not respect them. That's bearish in that case. Respecting them would be bullish signature, that we trade higher from here. But because we traded lower, and then that's the reason why I was only expecting a lower time frame retracement. Why? Because we are not in bullish conditions. We are finding support in here basically, trading above it. I really am, or I am looking at multiple screens, therefore I see how we trade in here. Not right now because I have not real-time data. I don't know, but that's the reason I'm still expecting that we reach for external sales liquidity, because I want to see that we fully close in the gap and approach basically the opening of the new open range gap right here. So therefore, to me, that's right here engineered sales liquidity. We definitely have a balanced price range in here. Definitely, we will have high resistance delivery lower, but the external draw should be the opening of today's new open range gap. So therefore, I expect this is right here engineered sales liquidity, and I expect that we will reach the draw eventually. I don't know when, but we should see therefore lower prices, and the basically upside, or the move to the upside right here, should have been a retracement, and now a expansion should once again follow to the downside, even if we can expect high resistance in here due to the many candles, due to the high time frame PD arrays, and so on. So yeah. So we got stopped. I'm basically now down $30 on the day, basically. Really small loss. In that case, I don't expect that we will actually reach lower. So now I regard basically the long close macro was a run on stops in here. Basically, retracement is now not finished. We are still trading higher, but that we basically fail to trade lower from here, especially because the 5-minute candle right here already traded into the 5-minute bearish fair value gap. We closed below the higher time frame gap, and from there we should have traded lower. We failed to do that, therefore I'm content with getting stopped. I don't expect a clean delivery to the downside now. We are definitely in difficult trading conditions, so to reach external Sales liquidity in here is definitely high resistance. So now you see we basically still flipped our 5-minute candle. Therefore, we are now bearish again, but still, yeah, on the lower time frame, that's really high resistance. That's basically also the reason why we want to stay away from lower time frame retracements. So because you just yeah, don't really have a clean delivery. Still, yeah, actually, once again learned that I have to really keep my stop below the swing low. I'm saying that so often, but yeah, it's something I really have to do. Our invalidation point is at the S&T, even if it looks like completely bearish. When we displace through the breaker with such a huge candle, that looks really scary and doesn't really make any sense. I definitely agree with that, but it's because we have a lower time frame retracement. Therefore, we will definitely have high resistance to the upside. Therefore, it's way more important to have our stop below the invalidation point, because yeah, the setup right here is still in play. We are still having a yeah, bullish retracement, and therefore we could have avoided the first loss basically of $70 US, and then we would have even been in the green on the day. Still, yeah, just a really small losing day. I wasn't risking much today, wasn't expecting a clean delivery. I think for the whole week we don't really have a clean delivery so far. Really difficult, more difficult trading conditions. So yesterday was actually quite interesting. Only had basically a only a up day, but what I really missed was the opportunity basically to go long in here. Was journaling that the lowest in, basically we don't need to sweep the New York Open Kill Zone sales liquidity. We scrapped already sales liquidity twice, and the hourly structure was just amazing. So have to show you that, and then we are done. So basically right here we'll activate the sessions. So yeah, basically only consolidated right here, then manipulated lower, scrapped sales liquidity. So Asia, London, sales liquidity right here, equal lows, daily sales liquidity traded lower, and then we traded higher, displaced higher, and basically had the perfect higher time frame fair gap right here, traded back to it and displaced higher, and also traded to the higher time frame gap right here. I think it's even on the daily chart, which I was, yeah, that's a suspension block on the daily chart. We were trading back into it, scrap daily sales liquidity, and from there on we just really had a aggressive move to the upside. There were definitely some possibilities to go long, even if we are buying overbought conditions, but in that case, because we are trading a continuation trade, that's definitely possible. So the low for the AM session is in basically right here. We wait for a sales liquidity sweep, and then everything followed after the short-term run-on stops right here could have yeah, just basically be a buying opportunity. I really like the close above the high time frame gap. So right here we could have entered. We could have entered within the breakaway gap right here, and then just aimed for the really clean equal highs. Can see on the hourly chart as well. So yeah, really clean delivery, equal highs right here, even here, and definitely the huge inefficiency right here. But yeah, so that's basically for it today. Kind of difficult conditions in here, many high time frame gaps. Really don't like the conditions actually, so don't think it's clean to trade in here. Just more like event horizon, so really difficult. And yeah, I think that's basically it. So I think the long right here is definitely really clean. We just have to avoid the loss right here and eventually the trade even right here, because after we are profitable, we stop trading. But because I was basically only break even, I commit to one more trade, but in that case it was a loss. We were not able to trade lower from here, and now I basically expect nothing for today. I think the higher time frame objective is met, and I will not basically try to look at the charts any longer for today. So that's basically it, and yeah, see you soon.